Paul, always a pleasure. Thanks for helping us get the week started off right. Paul, last week we saw crude to a new 2018 low. That's $49.41. That was $27 roughly off that October 3rd high. Paul, do you expect to see the volatility continue this week, or have recent comments from Russia and the Saudis been enough to, well, for now, calm the markets down some?
Well, there you go. It is for now. And
Okay.
while they have a tentative agreement, and we got some information too from Canada, they're cutting back on some of their production. That's lit a fire underneath the energy markets. And I think OPEC is going to be a very important meeting here to see whether they actually do stick with their production cuts. Right now, the estimation is kind of a coin flip as to whether there's really going to be any significant announcements from the OPEC Plus meeting. What we're hearing right now is some cuts. But you got to remember, too, in the energy market, the U.S. now is the largest global producer of energy, and really we're more in the driver's seat than OPEC and Russia are as far as dictator of price. And right now, as you noticed by the inventory builds over the last 10 weeks or so, we're sitting on an awful lot of oil. So while we got the pop here, we could see energy trading between, say, $50 and $60 for the next few weeks to certainly months or so. The risk still is on the downside as production continues to ramp up in the United States.
Paul, are the cuts coming because price is falling, or because we're seeing, a huge increase in inventories, as you mentioned?
I think the cuts are coming more because they would like to see the price up.
Okay.
Again, and the energy market's kind of interesting in the fact that, the supply or prices really dictate supply. When we got up to the $100, $110 area in 2014, we saw a lot of production come on. When we got down to $27 a barrel, we saw a lot of production cuts. So we're looking at that today. 50, I think, is a very important level. For a longer-term perspective, will have impacts on a lot of the other financial markets, high yield, equities, global growth, and production here in the United States, I think, is going to be the key driver.
So, Paul, I'm hearing about a 1.3 million barrel per day cut roughly. I'm wondering, do you think that's going to be enough?
Again, I'm not sure that it will be. Judging by what we're seeing in the weekly builds of inventory here in the United States,
yeah.
I don't think it will be. I think, too, some of it is political. We've talked about it a little bit in the past, that the United States, I think, is putting some pressure on Saudi Arabia and Russia by producing as much as we are, keeping those prices down to hurt their economies because they're so dependent on energy and certainly higher energy prices.
So, Paul, on one hand, we've got the Fed with recent comments from Fed Chair Jerome Powell. He painted a fairly rosy picture in terms of the economy and his expectations that it's going to remain strong. And on the other hand, you've got markets like copper and crude pointing in another direction. What gives?
Yeah, it's interesting. I think Powell's comments were kind of a walk back from his October comments about very strong, and we're a long way from a neutral rate. I agree with you. I think really, if you're taking a look at the global growth picture, you really want to take a look at the commodity market, and commodities across the board are doing poorly. Whether it's trade related, we'll see some of that reverse today. We're seeing it in the grain markets. We're seeing it a little bit in the energy markets. So we'll see a pop in the commodity index. But that index has been in a downtrend now for much of the last 3-4 months or so. And that is pointing to lower inflation rates, probably lower growth rates, and maybe, too, also lower interest rates, which we've talked about earlier as well.
So, Paul, a big part of the run-up that we saw in crude prices from the 44 to 70, or 45 roughly to 75 was 77, was OPEC production cuts they made to they were trying to reduce the glut, if you remember. With the announced cuts expected, are we talking wash, rinse, repeat?
Yep. Again, it's a tough call because as we know historically, whatever OPEC decides to do, somebody is on the periphery cheating. So I'm not sure, we'll have to see how this plays out and how resolute those countries are in truly cutting production. And again, the wild card player here, which we've never seen in the past, is the United States as far as a global oil producer.